Hey, what is up guys? We had a roller coaster ride in the stock market last week and what seemed like a jitter in the market after the collapse of the second largest crypto exchange, FTX. We immediately got a huge rebound in the stock market after the US BLS released good news with regards to the October CPI inflation data, which I will cover more about it in just a minute. The 10 to 2 year yield spread, it is still not recovering and hover around the negative 0.5% level, no thanks to the hawkish speech by Jerome Powell 2 weeks ago, which he said that the Fed could be pushing the terminal Fed funds rate higher than the estimated 5% level. So based on this leading indicator, we are definitely not out of this mess yet. Oil prices still at the $90 region as expected because the OPEC Plus chief said that they will remain cautious on production, which means they have no intention to increase production at all in the near future. So that means we can expect the oil prices to stay at this level for the foreseeable future. And plus, the elevated oil prices is also caused by the announcement from the China side where they are easing their COVID-0 rules by reducing quarantine period and lifting flight bans. Hence why most of the Chinese stocks soared last week. But from the perspective of a US market investor myself, I would continue to pay attention on their lockdown restrictions because that is what hurting the production rate for companies like Apple and many more, and that eventually contributes toward the CPI inflation. By the way, if you're enjoying these weekly market updates, I would greatly appreciate it if you can help me hit the like and subscribe button down below because that will give me more resources to create more and better quality videos for you in return. Thank you so much. And before we move on, here's a quick word for the sponsor of this video, moomoo, a brokerage platform that provides you advanced charting tools, analysis, and smart indicators for you to identify stock price trends easily and faster, both on their mobile app as well as their desktop trading platform. You can also easily sort out stocks with their stock screener that comes with over 100 indicators, and also check out stock portfolios from famous funds such as Warren Buffett's Berkshire Hathaway and so many more. Feel free to use my affiliate link down below to get free $10 cash coupon, and if you deposit more than 2.7k Sing dollar, you will also receive up to one Apple stock, which could be worth around $140 per share. And if you are watching this from the US, you can also use my link below to win up to 15 free stocks. Thank you moomoo for sponsoring this video. Let's get back into business. Now on towards the CPI inflation announcement, we got 7.7% year over year for the month of October, which is actually quite a surprise because the market expected the oil and gas prices to keep them elevated. But apparently that is not as high as the pressure from the interest rates, which have shown its weight on the consumers' demand and hence the slower rise in CPI, which you can see from this chart. It seems like the headline CPI has peaked in June and we seem to have passed the so-called inflection point. So let's dive into the details. Food prices up 0.6% month over month, and that's lower than the months before it. And energy up 1.8% month over month, which is not a surprise, especially if you watch my weekly Monday videos. You should know that oil prices have stayed at a relatively high level of $90 to $100 per barrel region, especially for the month of October. And core CPI, which excludes food and energy components, it is up 0.3% month over month, which is actually a surprise because for the past 2 months we have had 0.6%, and that's why you see the optimism in the market grew so much last week. And looking at the other items, we can see that except for the new vehicle prices, items like commodities, used cars and trucks and apparel are all down month over month. However, shelter cost is up 0.8%, which is still growing very strong at an over 30-year high level because of the pressure from high interest rates, which shifted the consumer's demand towards rental as opposed to buying new houses. And this will likely prolong for a longer period of time because rental contracts usually take about 1 year to mature, and landlords left and right are probably going to jump on the bandwagon and take advantage of the situation by raising their rental prices. Transportation services also up 0.8% month over month, but we can see that it is starting to slow down its gain in comparison to the previous months. So overall, this CPI report is music to the ears of every investor. It's a small win, but let's not forget we are still far from the realistically 3 to 4% inflation rate. And that said, I hope you are still continuing your DCA routine because I haven't stopped mine either, and you would know it if you follow my Instagram stories. Now over on the US midterm election, as of the recording of this video, the Republicans in red are leading the race for the House by quite a margin, and it's a very close battle for Senate with the Republican again leading by just 1 seat. I'm sure by the time this video gets uploaded, the results would have been out, but let me just pull out these statistics for those of you wondering what would happen to the stock market if Republicans won. Historically and statistically, when there is a Democrat president like what the US have now in Joe Biden, if the Republicans take over the Senate and House, History tells us that the S&P 500 returned over 66.8% in 1994, 43% in 1997, 20.9% in 1998, and 12.9% in 2014. But as usual, historical performance does not guarantee future results, but I will just leave it to you to interpret this data. So upcoming important dates for this week, we will have the Producer Price Index PPI inflation data on Tuesday, which will tell us the inflation on the producer's price, aka the raw material side of things. It's not as fancy as the Consumer Price Index, but do you know that the PPI is actually a leading indicator that can also give you a glimpse of the upcoming CPI, because whatever the producers face will eventually trickle down to the consumers, right? Yeah, quite cool. Anyways, we will also get the retail sales data on Wednesday, which will tell us the consumers' demand for finished goods. We should see a demand compression since the CPI data for October has shown us signs of it, but we'll see. I will keep you guys updated next week. And before I end this, for those of you guys that have been tuning in every week, I just want to let you know that I really appreciate your time, and hopefully this weekly series have been of value to you. It's been super hard for me to keep up with it because I need to stay on top of the news, filter the noise, and process them over the week, plus spend the entire Saturday just to get this produced and ready to be uploaded on Monday. But rest assured, I will continue doing it as long as you guys are enjoying it and benefiting from it, and I will also be slowly tweaking and optimizing the series week after week so that you get the most value out of your time spent here. Alright, thanks for watching. I'll see you in the next one.